Hello, welcome back to Topic Tuesday with Alan Dembski and Juliana Janson from Buffalo First Wealth Management. We have a great topic today, I think, anyways.
I do too. I do too.
We're super excited to make this video today, and it has to do with why do I need an advisor, or why should I work with an advisor, either way you want to ask it. So I'm going to kick it off to you.
And Alan and I are passionate about this because both of us love our job. We love working with people. We love helping them. But a lot of times we get questions from potential clients as to why what do you actually do? Why do I need an advisor? And the answer isn't always, after doing this for a few years, the answer isn't always what you think it is. So money is a very emotional topic. We talk about this in the videos a lot of times, and certainly in the office. And sometimes having a third party to be a stabilizing voice, especially if you're working with a couple, can be very helpful in terms of the complexity that exists in this field. And if I could just give a couple examples, I have two colleagues that I work with, two different companies, and one of them actually when the dot-com bubble burst, they panicked, and these are both individuals that were very well versed in personal finance. They had degrees, but the emotion of it got to them, and both of them, one of them in the dot-com era, and one of them when the financial crisis hit, took all their money out of equities and stayed on the sideline watching their money or watching the stock markets go up, not knowing when to get in, when to get out. And it's actually part of the reason that I got into this field, because I think that even if you're knowledgeable about it, you can, as an advisor, be the stabilizing force that people need. And the other reason is for couples. Rarely do you have couples that approach money in the same way. Typically, not always, but typically there's a spender and a saver. And sometimes putting the structure around your financial life in such a way that their expectations are laid out from the get-go will cut down on fights, basically, because it takes the emotion out of it, and you can put structures around it to make that happen. So, I mean, that's part of the reason that I love doing what I do. It definitely comes up more than once.
And I think it, just thinking back, that sometimes when we're talking to couples, it feels like, it's almost like telling your kids something and then they're like, no, I don't want to hear it. So, but if they see it and they hear somebody else saying it, sometimes it resonates a little bit more with that person too.
And the emotion is taken out of it. The advisor isn't emotional because they can look at it objectively.
Right.
Whereas when it's your money and you have the intricacies of your relationship, that's taken out of it when you introduce a third party who can sort of be objective.
And it's funny because a couple of weeks ago, I had a couple come in. The husband came in first, and they were talking about moving, and we discussed, my thoughts on, maybe look at a few different things. And he said, oh, that's what I've been talking about, and she doesn't want to hear it. But at the end of the day, once both people hear each side of the story, or you dive more deep into it, then they can come to a real conclusion on what they want to do.
Definitely.
This is pretty funny. But I think one of the other things is time. Like, how much time do people want to spend after you work your day job, your 8 to 10 hours a day? Do you really, or if you have kids, you really want to go home and spend another few hours researching economic news, market news? If you're do-it-yourselfer and you're trading in your own account, whether it's Robinhood or whatever other platform you're using, do you want to spend time researching those companies and doing it all yourself? Economic things happen every day. And I think the biggest thing is, oh my God, the tax law changes. You just look at the last 4 years. You had the Secure Act 1, then you had Secure Act 2, and now you just had the One Big Beautiful Bill. So within the last 4 years, you've had 3 major tax law changes for people in retirement accounts or saving for the future. It's a lot. Like, how much time are you going to spend on the IRS website looking at this stuff?
Yeah, especially it has to do with, do you like it? If you
Right.
like doing it, that's one thing. But I got to say, most of the people don't. They're not like us.
Right.
They're not nerds.
Well, you bring up your friends that have master's degrees and MBAs, and they like this kind of stuff, but thinking objectively.
Yeah, exactly. Right. And I think the other thing, we find that people come to us when there's a crossroads in their life, whether it's a marriage or a divorce, or you're having kids and you start thinking long term, or, probably the most common is people that are ramping up to or close to retirement. They want to know whether they're on track, and they want to set up a plan so that they can feel comfortable and not have to think about it, and
Right.
not have to spend the time on it, not have to spend the emotional worry about it. And that's part of what I like most about being an advisor, is taking that worry away
Yeah.
from people. They come in, they're not sure, they haven't really spent enough time on it, and we sit down and lay everything out, and it just clarifies things for people.
Right. And another recent example is somebody I know was getting married, and I asked him, well, how does your spouse feel about money? Because if, back to your original point, you have the spender, you have the saver, where do each of those people fall into that category going forward when life does change rather quickly?
Yep, definitely.
And I think some of the other strategies that people don't even realize or conclude, or somebody that went to school for finance, they might not realize other strategies or forgot about them. Just think of how much stuff you knew about. We review stuff every single day, and there's moments looking back, but tax loss harvesting, direct indexing, a lot of people don't even know what that is. Charitable giving, if you're a retiree and I've been investing myself, but then I'm taking my RMDs, should I set up a charitable trust, a donor advised fund, QCDs? Should I be doing some of those strategies? And we mentioned the Secure Act a few minutes ago. Some of the major changes with that were Roth strategies, whether it's conversions or backdoors or some of those other things. What are the rules and regulations? And some of that changed with accounts that you can and cannot do when it comes to some of those strategies. So I think that anything you want to add that we may have forgot about in that snippet of why you should.
Just the conversations that happen around this office, it's nice to have other people, because this stuff is complex. And
right.
I think people shouldn't feel badly if they are not on top of it, because most people aren't. And that's why you need an advisor.
Right. And, sometimes I've seen things online, I'm going to throw this in here too, is, well, an advisor costs money. Would it cost you more money if you make the wrong mistakes? I guess I would say. So,
and you bring up a good point when you say online too. There are a lot of people online that are trying to sell you something, don't have your best interest. So, it's not just a case of, I'll just go online and get my answer, because you might be led in the wrong direction. So.
And Google does not always give you the right answers.
We know that. We absolutely know that.
You have to fact check your fact with Google.
Exactly.
So with that, stay tuned for our next one. We'd love to hear your comments of why or why not you would need an advisor. So until next time, Alan Dembski, Juliana Janson with Buffalo First Wealth Management.